Hey there, folks. Welcome to another market internal review for September 15th, 2023. So, at the end of today, we've capped off half of September's trading. Starting off with SPY, it had a nice $3.22 gap down. Of course, the entire market had gapped down, and yesterday we had a gap up, which Wednesday night's video that I had published, I said, given the VOLD reading and price not really following through, that I had expected a gap up. It's exactly what happened. And after a mid-daily gap test here around 10:15, we decided to break out and test the top of the gap once more before we pretty much had a nice trending day up most of the day. That range basically was, I think, about $6 at the high. Oh, okay, no, $4.50 at the high. Closed 375, just shy of $4. Not a bad day at all. Yesterday we ended with decently hot volume and price on the New York Stock Exchange. I was a little concerned that we might see a little bit of a retracement, and boy, we saw quite a lot of retracement, as indicated by this gap. I was somewhat hopeful, given the price action on the other indices, that we would retrace near the midpoint of this gap, which perfectly aligns with the lower first standard deviation of Thursday's TWAP data. But alas, they didn't even try to break in. We'd never even tested previous day's low. We rejected the third standard deviation low of Thursday's data. Once we broke that, we had this retest and then this engulf right here. I mean, that basically was all the signal I needed to at least make an attempt for shorts. TWAP's red. We already had strong tick data. We haven't had it in the mornings here lately. We've had these tight little TWAP consolidations. I mean, yesterday I guess was slightly different, but Wednesday we had no tick. Tuesday we had no tick in the morning. Monday I guess we had a little, but then most of the rest of the morning TWAP's flat and square, no tick. So seeing a little bit more tick out of the open. I guess we didn't really have any right here. We had a little break here. But I guess just after a huge gap down, after a gap up and buy, and just completely reverting. Today also was triple witching, they call it, and that's when you've got your monthlies, your quarterlies, and your weeklies expirations on the options chain all hitting at the same time. So typically on those days, you will see more volatility. You'll see just more erratic price action as everything's being sorted out. So, but the open also presented, given the whole market had gapped down, a red price and volume analysis by MIT. The only thing that gives you some kind of pause is that trend isn't anywhere to be seen. However, on this engulf, we had seen some trend show up here. We had this tick, could not break highs, rejecting this level. That's a short for me. So basically from there, that entire time we sold off. We closed just above the low day at about $3 down from the gap high. I mean, basically just add a little over 3, so $7 move. So quite extreme. We did have an extreme bear print right here at the end on tick. We had a mercy squeeze that really just panned out to be continuation until we did get this little knife. But every attempt at a standard deviation reclaim and potentially looking for a break above TWAP, was rejected. This last one here was really nasty. I did try this long today, just given we had some trend balance show up. I thought the potential for it was okay. The volume and the price and the volume on the New York Exchange was attempting to curl up. You can even see Mercy here showing us potentially strong oversold environment, especially with this crossover. We're seeing the tick average closures come up. We're seeing a little bit of a trend flip on the New York Stock Exchange, so valid enough for me to give it a shot. We reject TWAP though real sharply, and then we're already, before we even do the rejection, the New York Exchange is already giving us that signal with the trend flip back to bearishness. These bands for price and volume never went green. Balance fully seated in, and we're seeing the average closures start to trend down. These bull ticks are absolutely nothing in comparison to what the brightest areas of the MIT tick histogram are, which is all bearish. So that's your your sign to basically get out of this. And this price action was just brutal. I mean, thankfully I was using shares, because options just would have melted through here. There's not enough sustained move to juice the contracts at all. So this rejection, I did pick up more shorts here, stop loss right at TWAP or just right above that wick, and that worked great because we continue to sell off the rest of the day. You also did have another entry if you're looking for a continuation TWAP style entry, and honestly, with the kind of gap here between TWAP and the first standard deviation, I would say it's a fair entry, and you can just trigger this or target this low here. Now it's sloppy as far as it's the risk to reward skews towards more risk for less reward. So I personally wouldn't have taken it from there. It did hit. You got about 70 cents, but you're risking, down here towards the low where it hits. I think it does reach 1-to-1, but not a great entry. This here would have been better, especially considering everything else. But yeah, it's probably was a good day to stay out unless you caught like this move where you were in from earlier. Overall, though, you can see we hit a negative 1,000 print on the New York Stock Exchange. With the decline, VIX spent most of the day going up, and AD spent most of the day channeling. So I found that quite surprising given a $7 move on SPY. Tick, the accumulation, all to the downside. Vold was bearish quite early on. We had a 0-point rejection. I think this was around 10:10. So 10:10, we reached the strong bearish zone before 11, which is highly unusual. We've really not seen that. I'd probably have to go back quite a ways. Here's 12. That's 1. I guess we reached it here by 11:30, but we weren't really in until past 12. Okay, 11:30, 12:30. It's just highly unusual. This is an aggressive drop by 10, not even 11 yet, and it was really nasty all day. So that definitely assisted my sentiment and trend. Here you can see it's struggling with. This is effectively balanced. We're not strong bull or bear, and definitely some balance. I mean, strong moves for sure within there, but they're not really showing up in SPY, save for a couple of these sharp drops that we had. I mean, this drop here was pretty good, and then this drop here was really nice, pretty clean. Maybe not this area right here, but if you were in already, this was not bad at all. And that's a couple $2.50 moves almost, so pretty nice. And then your typical lunch slump, 11 to 12, almost 1, I guess. And then end day, it didn't provide anything. So that's mostly the assessment for SPY. Where do I think we're going with that immense volume sell and SPY following suit? Most of the indices also followed suit. The composite index is still above the monthly TWAP. It was really a bummer to see us lose the first standard deviation. We worked all day Thursday to break up through into some new range. So I had higher hopes that as we were starting to drag the monthly TWAP up, that we were going to actually start exploring, maybe even having some second deviation tests towards the third. But it's not what they had in store today. But we are still above monthly TWAP. So I'm encouraged that perhaps we'll come back to the previous day, or to this day's low, and maybe Thursday's low next week. See if we can't get some progress there on that for upside. For anybody that doesn't know, I do believe the market should go up most of the time. Sure, there are downside days, but the market's designed to go up. So most of the time when you hear me talk about where I would like to see range go, obviously it's going to be towards the upside. But I try very hard to not let that bias affect my intraday and short-term narrative and idea generation. SPY, on the other hand, you can see we had basically almost to the cent monthly TWAP rejection, and there's all the same rejections on session TWAP. So this one is definitely a more bearish case. Yesterday we tried to break into that August-September flip monthly gap zone, and we really struggled once we were in there. We couldn't quite tap the mid of that. So that definitely gave me a little bit more of a bearish case. There's also that monthly TWAP level there, which we darn near rejected to the cent. So a lot of work from Thursday was undone. Not very bullish on SPY. But of course, an immense $7 sell will have me looking for at least a bounce before lower. But I do have some other things to look at for that. So Qs I was a little more interested in today. They really I didn't feel any kind of strength compared to SPY. They really just seem to sell off a lot harder. So you can see with SPY, we've got a pretty tight range until 10 o'clock. We're basically stuck. We're basically stuck in a dollar range from open until 10 o'clock versus the Qs. It is not that. It's not that at all. We start here, and by 10, let's see, where's 10 at? So by 10, we already dropped almost 250. So Qs was interesting to me just to see tech really starting to sell off right out of the gate. And so I was noting it and sharing these charts elsewhere. But these are just the things I noticed. So we had the same kind of gap down, smaller than SPY, but still a decent gap. And of course, we rejected it. We didn't even stop at monthly TWAP. We basically just ripped right below it. Then we got this nasty consolidation right around here at previous day low. We do stop there for a bit. What's that low there? 372.57 and 372.61. I mean, they definitely stopped at this TWAP, monthly TWAP level a handful of times. We finally ripped down through golf, and then we range this area for so long. This TWAP range here is $1.50, and this candle action was tighter than that even. And we did not break out of that for 2.5 hours. We sat in that range. Just, this is grueling. But we had the really crazy rejection right here. We dropped no buying whatsoever through here and kind of rest right above the second deviation low. There's also a monthly TWAP level down there. We reject this one here and just mostly finish the day out flat again. That part of the session rather. So this is another dollar range roughly. for, well, not 2 days, about almost 3 hours. So really nasty, but bearish again on Qs. We're below the monthly TWAP. We're out of the first standard deviation to the sell side. Really tragic. Now the Dow did great yesterday. They ripped right through the monthly gap here. We consolidated around the midpoint after rejecting it. We held fast over August's TWAP price at 348, which I brought all this up in the last video. This TWAP level here provided a little bit of resistance, and we reject, we hold, we make a lower or higher low, and rip right through. And we even close out of that second deviation high. I believe that's second deviation high on the month. Yeah, on the monthly TWAP, almost hitting this TWAP level, but we settle right there at the high of the monthly gap. But I mean, just a beautiful day, really strong, and I think that helped bring the market up yesterday. I think it was a lot of Dow that was bringing the market up. But sadly today, we reject August TWAP price. We also wicked the August gap, monthly gap midpoint. We lose TWAP. We spend a lot of time in the morning rejecting TWAP. It's more strong than the others, but we finally do make that rejection. Current monthly TWAP, once we reject that, or lose that rather, we really just we go down big time and in a hurry. So that was about $1.30 in 30 minutes. So pretty fast compared to the rest of this. And this is a big reason that I am a believer in the monthly TWAP. I'm sure you could get similar analysis with VWAP, but I've already explained a handful of times why I like TWAP better than VWAP. I might be biased because I concocted it, but yeah, I see these reactions in price to the TWAP stuff here, and it gives me a lot of confidence in the assessment the indicators provide. But once we lose that monthly TWAP, this is just clear selling all the way down. Let's see the low 3.456, 3.4561. So they were 1 cent off of this monthly TWAP level. Beautifully accurate. Then we reject that one and comfortably stay within the range of these two here. So quite a sell for the Dow. At the lows, 430 and change. From the close, 388 off of that gap high. From open, about 221. So quite bearish on the Dow, just right back below monthly TWAP, and this is quite the reversal that we had. So we'll see. We will see. Finishing it out here with the Russ. So Russ, I mentioned in the last video that the rest of the indices I thought were doing better, but it was really going to come down to the Russ and whether or not we were going to see it reclaim its monthly TWAP. And if we didn't, then I thought the rest of the stocks, the rest of the indices would be brought down by it. Yesterday, we had not one, not two, but 3 rejections of monthly TWAP. I mean, they're just, you got Dow going, you got SPY going, you got the Qs going. Russell is locked to that low end of monthly TWAP, not able to find buyers. And you can even see from the accumulation distribution, we're all sell side for the most part. We had a couple of chances, but I mean, New York Exchange is all green all day per Mercy. We even had some squeezes. I mean, that one manifested a pretty good short, but no strength to get over that hump. But today, boy, they came home to roost here with the bears, and we lost that gap. We lost this TWAP level, previous day low. That was that nice engulf we had. And then we kind of do the same thing that Dow had done, and the Qs had done, where, I mean, it's even more brutal on Russ. We had like a 25-cent range for, it was even longer than this hour and a half. I mean, we didn't really break it until 2 hours later. Just nasty. Now, we saw a couple squeezes here. We got one squeeze and two squeeze. And what I have learned in watching these squeezes, by the way, for anybody that is still using the Mercy indicator, is once you see these squeezes, wait for the crossover. That's actually, that's really all that seems to be needed. Is if you get that crossover, then that's a good confirmation that the Mercy is showing you a trend flip. So we can see here we had one, a Mercy squeeze, but no crossover. And then we get this one here. Then we finally get that crossover, and look what happens. And we come all the way back up to this monthly TWAP level. We finally do reclaim and go above session TWAP. So that is a much better way, I've noticed, much more improved way to use these squeeze signals. Is use the squeeze signal to start looking for the crossover. Once the crossover comes, that prior squeeze signal seems to confirm. Obviously, nothing's guaranteed, but that is something I have learned in the past week of watching Mercy. It's kind of the way these things work: is you build something, you test it, and you wait and you observe, and things pop. It's just how it works. You can see here we had another squeeze Thursday at 304. We finally get that crossover on the 308 candle. Perfect, right? Beautiful entry. We break that structure there. Boom, all the way back to monthly TWAP level and session TWAP. So still very bearish. So most of the indices are bearish as far as I'm concerned. The Dow is bearish. Russell's bearish, Q's bearish, SPY bearish. The only thing that's giving me pause to say expect just more selling in September is the composite still has not lost the monthly TWAP. If it does, we're going to have to wait to find a bounce point before more upside. So I'm going to try to I'm going to try to finish this up quick, so I can tell this is already going to be a longer video. Apologize. For SPY. So SPY, we have our trend line here from the week. So one I've had on my charts now for a handful of videos. So just to recap, what did we do? We had this sell-off starting, mostly from July. We brought it all the way down to the weekly trend. August 18th, we start to find buyers. We wiggle both sides out, and then we bounce one more time. End of August. Boom, 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 right? We come all the way up to this quarterly trend, and this previous structure here is providing potential either confirmation of more upside, and we're going to attack these relative highs from near end of July, or we're going to find more sellers, and we're going to come down, right? That's what we do. Don't clear that structure, so it confirms, in my opinion, that it's still there, still present, and we come back down. We bounce on the 20 SMA, and we wiggle through. Yesterday, Thursday, we close above the 50, above the 10, and above the 20. But we have some things going on here. Lots of wicks, right? None of this is confidence. This is a confident candle. This is a confident candle. When you see these wicks, at least for me, I see a lot of hesitation on either side. Nothing is really being decided directionally as far as I'm concerned. There's gaps in here and all kinds of nasty stuff. So there's still a ton of sorting. Look what happens. So today we close below the 50, below the 10, below the 20, and we wick the weekly trend line. And we clear all of these candles here that had all this wick action. So most of the sectors are curling down now, including energy. Energy had a huge day, 24 million in volume. Finance did as well, 51 million in volume. Handful of the other ones, industrials and utilities, were actually fairly high in volume, 17 mil, almost 12 mil in industrials. And then our 5-day S&P stocks above 5-day average were back. We almost broke into that bullish zone. We were at 75% at the end of day Thursday, yesterday. And today we cleared down about 30% of the stocks, and now we're resting below 50 at 46% of stocks. So only about half of S&P is above the 5-day average. So lots of turn down here. It seems like a squeeze. I'm thinking when I look at this seems very squeezy. So a couple things. The 100 is still trending up. The 50, I'm going to call that an uptrend. The 200 is still way down here. It's still trending up. So I think Monday we better see this low maintained. We can still turn this around. And if we have Monday, if we start finding some buyers, we can still break up through here. If we start to challenge this area here, okay, if we start to challenge that area there and start to make a new low and we break this weekly trend, then I think we come down to 100 SMA, potentially even lower. But that next area that stands out to me, we got a lot of wicks here. We got a little bit of this body. I would say this next area would be in focus if we make a new low here and we really break this candle. I mean, the 50% of this candle is what I wanted to see us hold, and we certainly tried. If you zoom in on these candles here, we've got a lot of bodies, 1, 2, 3, that were handsomely sitting right on this 50% line. And that's why I don't necessarily treat ranges and gaps like everyone else. I don't consider ranges and gaps filled just because we trade through them. Like you can see these wicks here. So to me, this is confirmation that a range can last much longer than just after it's been quote unquote filled with these bodies here. So that's going to end the assessment and kind of what I have to show. Encourage you to always look around and do your own research, but these are my thoughts. Hopefully you had a wonderful week. Hopefully you've got something amazing planned for the weekend. I appreciate you devoting your precious time to watching me rabble on about market internals. If you've got any suggestions or feedback for me or anything you would like to discuss, please feel free to bring it up in the comments. Feel free to check out my indicators. Hit me up on X, and I will see you next week on Monday. And as always, thanks for watching. Happy trading.